For more on the markets and earnings, let's bring in Kathryn Kaminski, Chief Research Strategist and Portfolio Manager at AlphaSimplex. At this point, Kathryn, the highs that we've seen in the Dow, all-time highs, do the earnings and the underlying performance of the companies, does it justify all-time highs?
Well, I think it's challenging because valuations are still very high. And if you look at the earnings season, it's been relatively mixed. So I think this week is going to be interesting with everyone focused on Nvidia. But ultimately, it's been a little concerning to us, those of us that trade cross-asset, because we've seen signals that the market has really shifted since this summer.
Can I talk to you from the bottom up? How about Nvidia? Any thoughts?
Well, I mean, I think Nvidia is going to be something that gives some momentum this week. It's probably going to beat expectations. That's going to continue people to feel that we're in a recovery mode. I think from our side, those of us that follow the technical signals across different asset classes, there's still a lot of concern for us in the sense that equity signals have become more noisy. We do expect more choppiness around as we move into the potential cutting season. So I think that investors are just a little nervous about what's going to keep equities at their highs.
Do you... will we see continued rotation, do you think, at this point, Kathryn? And if so, what trades are favored, or do you expect to be like tomorrow's news?
Well, I think this week it's really going to be following the economic data. And as we see that, we're going to see some rotation out of the big tech companies into more of the Russell. We've already seen some of that. So I think we're going to start seeing a little bit of repositioning given the valuations and how much people have overpositioned in some of these big tech names and possibly shuffling around as they take gains. And
you really looking at consensus thinking on interest rate cuts and what we're expecting now? They'll do it in 25s. Will there be a 50?
This is a good question, because I think it's pretty much, if you listen to the Fed commentary last week, really from our side, it looks like it's definitely happening. And I think everyone's going to be focused on 25 or 50. I'm leaning a little bit towards 50, just given sort of how much the Fed has focused on the recent employment data and sort of the shift in focus away from inflation. But I do think that is going to create a lot of question, and people will be questioning it going into September. I mean, this week is generally a quiet week, so it's hard to read on market moves this week, but I think we're going to be very attuned in the next few weeks.
All right. Have we seen in this cycle on the 10-year, do you think we go below 380, or are we going back up near 4, do you think? And does that matter?
Well, I think what happened is you had a very, very big move earlier this month in yields and sort of this immediate reaction that we're going to get very aggressive cuts. And so you've seen some retraction from that move. What's been interesting to me from the technical side is that fixed income signals remain steady. So it might be a time to lock in some of those rates, especially while they're higher on the shorter end, particularly because as you look at the long end, if we see some changes in inflation or other things, we may have more volatility in long-term debt. So I definitely suggest finding those higher rates, locking them in now, and maybe being more cautious on the long end of the curve.